Today, we are connecting the dots between three massive stories that are really shaking things up. You've got a war in the Middle East, a crazy market frenzy in Korea, and a brand new threat to big tech. Geopolitics is absolutely in the driver's seat. And we're going to break down exactly how it all connects back to your portfolio.
Okay, let's just kick things off with a quote that really sets the stage. The market commentary we're digging into today points to this statement: military action is more important. Now, what does that really mean? Well, for traders, it's a huge signal that geopolitics, not just the usual economic data, is what matters most right now. It's basically a green light for anyone betting on higher oil prices and tells you this conflict is the #1 story to watch.
So, you're probably wondering, how on earth does a war lead to some wild market action in Korea and then create a huge headache for Silicon Valley? Well, that's the puzzle we are putting together. We're going to trace the ripple effect all the way from a single missile strike to a new government proposal that's targeting some of the biggest companies on the planet. Let's get right into it. All right, first up, the war, the oil, and the jittery markets. You see, the escalating conflict in the Middle East is the real flashpoint here. It's sending shockwaves through the entire global financial system. And you guessed it, it all starts with the price of oil. You can almost see the chain reaction happening in real time here. It's day 6 of the conflict, and boom, a U.S. oil tanker gets hit. Instantly, everyone's worried about supply, so oil prices spike. And what happens next? No surprise here, the stock market tanks. The Dow drops over 1.5%, because at the end of the day, higher energy costs are like a tax on the whole economy. It's a super clear cause and effect. And this is just a brilliant way to describe the market right now. The source material calls it a washing machine. And it's perfect, right? The S&P 500 is just stuck in this chaotic spin cycle, throwing both the bulls and the bears all over the place. There's no clear direction, just a ton of volatility as every new headline yanks the market one way or the other. It really captures the uncertainty perfectly.
Now, let's get to the next piece of this puzzle: what's being called the Great Drone Dilemma. See, this isn't just a typical conflict. There's a very specific challenge here. A type of asymmetric warfare that's creating a massive economic problem.
This right here is so important because it all comes down to the math, and the math just doesn't work. The Pentagon itself has pointed out how tough these drones are to stop. Think about it. The threat, this aerial EK-47, costs about $30,000. The defense, a Patriot missile that costs over $1 million. You don't need to be a military genius to figure out you can't keep fighting a $30,000 problem with a $1 million solution forever. And that crazy economic reality leads us directly to this. At first, the market was really hoping this would all be over quickly. But an internal Pentagon assessment, according to our source, is now saying this could drag on for at least 100 days. That just shatters any hope of a quick fix. So, the key takeaway here is that the market now has to price in a long, drawn-out period of instability, which means higher oil prices and more military spending. So, when you get this much uncertainty, weird things start to happen in markets around the world. And for a truly wild example of this, we've got to take a look at South Korea, where all this tension has fueled a completely bonkers market ride. Just look at that number, plus 11%. And no, that's not some meme stock going to the moon. That is the KOSP, South Korea's main stock index. It rallied so hard in one day that it actually triggered a circuit breaker for the entire market. I mean, a national index trading like a penny stock? What on earth happened? Well, according to the analysis, this was just a crazy round trip for capital. The theory goes like this. First, the Korean market was tanking, so traders panicked and fled to what they saw as a safe haven, Bitcoin. But then the government stepped in and announced a rescue plan. That was the signal. Traders apparently dumped their Bitcoin and flooded right back into stocks, creating that massive spike. It's a fascinating and kind of terrifying look at how retail sentiment can just whip a major global index around. Okay, let's zoom back in from that huge global picture and get down to the stock-specific level, because that same geopolitical tension is now creating a brand new problem for big tech. Let's call it the AI chip showdown. So here's the bombshell that dropped: a new proposal from the US government to put global export controls on all AI chips. What does that mean? Well, it means a company like NVIDIA or AMD would basically need a permission slip from the Commerce Department to sell their advanced chips to any customer outside of the United States. It really looks like an attempt to control who has access to the most powerful computing technology in the world. And you can see how the market immediately started picking winners and losers from this news. For NVIDIA and AMD, this is obviously a headwind. But then you look at a company like Broadcom, and its stock actually went up. So what's the deal? It's simple, really. Broadcom's biggest customers are American tech giants like Microsoft and Meta, so these new rules don't really hit their core business, making them look like a safer bet in the chip sector right now. But here's a really interesting, and maybe a little cynical, take from the commentary we're analyzing. The analyst points out that this news dropped right after NVIDIA's stock hit a very specific technical price level. The suggestion, and I'm quoting here, is that it was all arranged, like the bad news was being held back on purpose. It's a cynical view, for sure, but it shows you just how deep the distrust can run for some traders. All right, so with all of that going on as the backdrop, let's do a quick lightning round of some of the other big winners and losers from the day. It really shows how these bigger themes are playing out in individual stocks. On the winning side, it's no surprise at all to see the oil and gas ETF XOP just continuing to rip higher. It's been on this beautiful upward trend since January, and it's a direct beneficiary of this conflict. Then, in a totally different corner of the market, you had the Trade Desk, or TTD. It had a huge pop today on rumors that it might be teaming up with OpenAI for ad sales. That's a massive potential catalyst.
And on the losing side, the logic is just as clear. Delta Airlines took a hit. Why? Well, higher oil prices mean more expensive jet fuel, which squeezes their profits. Simple as that. Then there's Ion, which just plunged after it announced plans to sell a ton more shares than originally expected. That sparked fears of dilution, and if there's one thing the market hates, it's the idea that their slice of the pie is about to get a whole lot smaller.
So, as we tie all these threads together, from a missile strike in the Persian Gulf to a trading frenzy in Seoul, to new regulations in Washington, it all comes back to this one central theme. We are in a market that is being completely dominated by geopolitical headlines. And that leaves us with a big question. With so much uncertainty out there, is this chaotic, unpredictable washing machine market here to stay? That's something we'll all be watching very closely.